All right. Good evening, good afternoon, good morning, everybody. Welcome to the Inner Circle Live Trade Room. I am your host for tonight's trade session, Benny Allen, with my awesome partner, Mr. Ryan Carthage. And I definitely appreciate all of you for being here this evening, spending some time with us as we navigate through the charts and take a look at what's going on in the market. So if everybody could just drop me a one in the chat if they can hear me loud and clear, quick sound check, and we can get things going. Thank you very much. Really appreciate it. So as always, let's make sure that we turn off any and all distractions, grab a pen and paper for notes, and let's make sure that we are ready to do an amazing job of participating and engaging. So just a quick disclaimer, trading the Forex market is risky. Never risk money that you cannot afford to lose. I am not a CTA, which stands for Commodities Trading Advisor, meaning that everything that we cover tonight is for educational purposes only. So we can teach you the technicals and the fundamentals. We can show you the setups that we would like to get involved in ourselves. But at the end of the day, you are 100% responsible for your own trading account. All right, so we are getting ready to close out the week. It's been a wild week, a lot of news fundamentally across the globe with the economies and such, but it did provide a little bit more clarity as to where the market wants to go. So what I want to do is we've got all types of news going on across the board, but if we were looking at our charts today, we should have seen that our yen got weak, right? Our yen lost some strength, all right, which is a safe haven, and your commodity currency started to go on a bit of a tear again, right? So that should tell us that, hey, investors are getting some clarity and they're ready to move forward and to take on more risk and to get things rocking and rolling in that stock market. So if we go let's go to investing.com, you kind of see, look, S&P rallies as bulls find joy in energy financials, right? So some good news coming out of the stock market. And everybody was pretty much waiting on the FOMC meeting from the Feds, and then you start to see the rest of the countries in their monetary policy meetings pretty much follow suit with the United States. So the United States and the Fed led the way, and then everybody kind of followed accordingly. So we'll take a look at the U.S. dollar, okay, to start it out, since everything is pretty much pegged to the dollar. We like to always take a look at this. And you can see we've got the up AB boundary on a 4. We got the real deep retracement when that dollar got weak. And then we've been trending up ever since. We got a pullback on that dollar today. But as you can see on the 4-hour, our stochastic is back in the buy zone. And we really are still making those higher highs and higher lows. This is just a more deep, complex pullback. So we'll see how we close out the week on Friday and heading into next week. And just remember, today is the 23rd, and we're getting close to being at the end of the month, right? So we're getting close to closing out the month of September, and it'll be on to October, okay? So if we look at the Forex calendar quickly, set this, and we come on down to Thursday. We saw what came out today with the pound. Okay, so we got a little bit of a hawkish tone coming out of the monetary policy meetings with the UK. Okay, and then just in retail, some flash PMI where that came in right on point for the United States, and then the flash PMI services PMI missed just by a little bit. So we got a little bit of dip in that dollar, but not much. And then you can see Friday. The major thing on Friday at 10 a.m. is that we got Chairman Powell. He's going to be speaking. So, of course, everybody will be all ears on that speech tomorrow to see if they can get any type of edge in the market fundamentally in regards to the U.S. dollar. So what I'm going to do is give everybody just a minute or so to put your chat request in the chat box, and we'll start looking at some pairs because the market is definitely moving. So let me know exactly what pairs you want to take a look at. So GJ, EJ, Euro, Swiss. Thank you. USD, JPY, CAD, Swiss. Okay. Yeah. We'll start out with that Aussie yen because that was the question that we left off with this morning. And then the GU, CAD, JPY. Okay. All right. So let's start out with the Aussie yen, and we'll start there. So we'll scroll up to the Aussie yen. Hold on. Good evening, everybody that just joined us. Okay. All right, so let's take a look at this Aussie yen play. And we'll come and we'll look at this from a daily perspective. All right. So this one, I'm just looking at trend lines and support and resistance right now. As a matter of fact, because I've got it all the way down to the 1. You guys want to drop me a 2 in the chat if you want to clear these charts out on the Aussie yen and just work it from scratch, right? Okay. My fib seem all busy at a time. Yep, Ken, we can rework that one too, the Aussie CAD. It's good to rework. We'll take a look at that one. All right, so let's go up to the weekly and let's break this down and look at the price action. Okay, so come down. Let's take this off here and clear this out. 15 will clear that. And I'll leave that template on and we'll go to the 5. All right. Ryan, how you doing this evening?
Doing well, bro. Doing well, man. How are you?
I'm doing great, man. Closing out it's been a long week this week. So
man, I forgot what day it was.
I know, right? So busy. So let's move this up to the monthly, squeeze the chart out, right? And run the drill. So good evening, Brittany. So let's squeeze this chart down. All right, like so. We'll mark our extreme high and our extreme low, just for good practice, right? The high is a low here. Okay, like that. Frame this thing out. Let's put some support and resistance on here. Matter of fact, let me see something here from a monthly. Where we are with the trend line. Okay. So that down trend line there. That trend line there, like so. Right. So we see we got a clear break at the end of trend line. And let's put some support and resistance in from the monthly. Some quick.
Danny, I have a quick question.
Yep. What's up?
On the trend line that you didn't draw it, but you just put on there, why did it cut through the candles? Being on what am I trying to, the most recent resistance point. Why did it cut through instead?
Right here?
Yes, sir.
Because it's trying to cut, this was the path that it was heading. That shows you that it was a trend line break, right? So when you draw your trend lines, you're trying to get to this highest point to the lowest point. This right now is your lowest point on the chart. So you don't adjust that. If this, see how this came up and broke it? That's just showing you that the trend line broke, right? So, right, you're trying to get through the lowest point to identify the reversal. This here, okay, is your lowest point in that downtrend. This is a trend line break, right? You're going back in the past, right? So you have to act like this didn't exist, right? So imagine this
Oh.
didn't exist.
Mm-hmm.
This didn't exist because the chart moves, right, this way.
Mm-hmm.
So this didn't exist. So look, respected the trend line, right? Respected the trend line. Here comes the reversal. It pushed up against it, and then it broke it.
Okay. That's something I've been missing during my markups. I would have put the trend line above that most recent resistance point. Okay.
Yep. And that's a common mistake. That's a common mistake. So with trend lines, right? And then if you never fix it, then it becomes like you hear people say, well, trend lines, they don't really work. It's subjective.
Mm-hmm.
It's not. It's not. It's just you have to draw them properly, right? So you have to identify, right? Trend lines help you identify the direction, right? The speed and momentum of the market, and can help you with entry points,
Mm-hmm.
right? So this is the direction that the market was going, right? Clearly down. This is the lowest point. When you map out your trend line, this is why we have this outer trend line. See, start here. Here's the second touch, straight through,
Mm-hmm.
right? Because a trend line is rigid. It's not like a moving average, right? That moving average right, it's elastic, right? It'll kind of go with the waves and the candles. Trend lines don't do that, right? A trend line is static. So here's your 1-2 touch straight through. Then you take from your second touch and you have to work your way down to the lowest point. For example, at some point, right? At some point, to the downside, this trend line was like this.
Mm-hmm.
Because this was the lowest point,
Mm-hmm.
right? Once you made a lower low on that trend line, you have to adjust it. See that?
That makes sense. Yeah, I've been missing that every time I mark up.
Yeah,
that makes a lot of sense.
It's okay. It's okay. That's why we're here. That's why you're here, right? So common mistake when drawing trend lines, right? So you wouldn't if you keep it like this, right? Then look, you made a lower low.
Right.
That's not properly guiding you in your trend line. See, like that.
That makes a whole lot of sense. Thank you.
You're welcome. You're welcome. So you got a break, and it actually closed a little bit bullish here, right? But that was kind of like a falsie right there, and then it went down, and then finally came back up and broke it. Yep. So that's how you draw it. And then we know that a lot of times when price breaks an inner trend line, it likes to gravitate to the next trend line. Okay. So that's where we are. That's where we are right now. That's a great question. Great question. So let's mark our support, our monthly support. Okay. And I'm gonna take these off right now, because when I use the same chart to go to the weekly, it's gonna eliminate them anyway. So let me pull that off right now. And we'll mark this next monthly level like so. Okay. And then we'll go down to our weekly. This. Let me squeeze it out. And you can see here that we're in between 82.01 and 77.88 right now. Okay, so we'll take these levels, mark that in blue for my weekly. Like this. Okay, and then we got a tight one here. We'll take that for a zone, just because let us know it's probably going to be a pretty strong level there. And that's what we look like on the weekly, right? So if we zoom out on the price action, now we could take away this support and this resistance level. Okay, it's a nice clean look. All right, you can see what the price action is doing. All right, here's the top of the range. Here's the bottom of the range that we marked from the monthly, and you guys can see that the market's just moving up and down and sideways. And you're looking at key levels. You can see it across there where there's weekly support at 78. even that even handle there, right, is you can see just from the weekly that you got past resistance becoming future support. And you got a reaction, right? So with no fibs, just price action, you can see where we are, okay? And while we got that reversal type action off that level, okay? Past resistance becoming future support, all right? So you can see here, here's a low, here's a higher low, right? Here's the higher high, and here's the higher low, right here, okay? So that's where we currently are, right? Looking at that from a weekly perspective. So now we can take this down to the daily, okay? Are we clear on that? Is everybody clear on just those two time frames, right? And marking out your support and resistance levels? Yes. Okay. Awesome. Right. Nice and easy. Right. We can rep that out now. We can do that. Okay. So if we zoom out, you can kind of see visually where you got that inner trend line break on the daily. Okay. So what I'm going to do is I'm going to close this out for now. All right. And you can see how we had that down impulse move, and then we got that upward push. Okay. All right. So what I'm going to do is this, right? We're going to start drawing some trend lines, right? We're not going to go all the way back to this point because this is actually the lowest low on the chart, period. That's way back there in the past, and you'll actually have a trend line that'll come down there to represent that break when it happens. So we'll start running our trend lines like this, okay? So if I take a smart trend line and I run it just like that with a click from that high, and look at that. You got your 1-2 touch, just like we had on the weekly, okay? Just like we had on the weekly, all right? So what I'm gonna do though, if I have that, if I wanna take this down through all of my time frames, what I'm gonna do is I'm gonna take this ray, right? Our ray tool, right? For our trend line, okay? Right here, this one here. And I'm gonna make that just a dashed line. And I'm gonna trace over it. This is what I like to do. So I know where I am on all time frames in the long term, over the long term. And I'm just gonna make it as even as I can with it, like this. Just so I know where that's at. And then I'm gonna right click on it, right? First of all, let me scroll through and see if it's pretty accurate. Yep. So we'll click on it. And the reason why I make it a dashed blue line, because if you put a solid blue line over solid blue line, you may be clicking the wrong one, right? So I'm gonna right click, and then I'm just gonna link that long-term trend line. I'm gonna link it down to the lower time frame. So now that's gonna be all, if you trade off a 4-hour chart, or if you trade off a 1-hour chart, or 5 or 15, that trend line is gonna show up, okay? So then what I'm gonna do is I'm gonna take my smart tool, right? My smart trend line, and from the second touch of that trend line, I'm gonna make me another one, just like this. Boom, just like that. And I'm gonna click on it, and I'm gonna extend it straight through, all right? And then I'm gonna take my ray tool again, and just trace it. Trace over it. So I know where I am, long term, boom. So now I have that on all the time frames, okay? So we could clearly see that from this down move, right? Can everybody see where that trend line broke? Drop me a 2 in the chat if everybody can see that. Okay. Right? So everybody has that level of spatial intelligence. We can see that. That's a clear trend line break and a directional change, right? To the upside. So we know that we've been making higher highs and higher lows, right? So this is uptrending. So this is why you will see us a lot of times for this long-term fib, bring it down to the low because we had a directional change. And we'll place our fib here, boom. And we'll run our fibs to the upside, just like that. Can everybody see that? Anybody need me to do that again?
I think we're good, bro.
We good? All right. Take that off. You run it like this, bang, just like that. Okay. So we don't have to find that and draw that ourselves. The smart fib, it does it for us, and it's super accurate, right? Find that low, place that cursor right below that lowest point, boom, click it, it ran it for us. So this is just measuring out our higher highs and our higher lows. That's what the fibs do. And based on those pullbacks and those retracements, you can look to project where to take profit from a daily time frame perspective. So ultimately, if we try to derive our directional bias using our monthly and our weekly time frame, okay? Or you could say your monthly or your weekly, whichever you want to use, right? I like to zoom all the way out so I can get those key levels of support and resistance, all right? So if we use those levels to determine our directional bias, right? Then you can use your daily time frame and these key fib levels to potentially help you to identify your low price, right? Your low price in the trend, okay? So your low price in the trend. Does everybody get that? So within this fib, right? If we think about the Fibonacci sequence, our ideal low prices are right in this green zone, potentially, all right? And once it gets to this level, right, we can trade down to this level, right? This B to C, because we're looking for that C. We're looking for that C, all right, within it, which is our lowest point within the AB boundary. Right now, our C is right here, right between that 50 and the 61.8, right? And up against that weekly support level, which is why we bring it from the top down. And you can also see from that higher time frame where we identified, right? If we zoom in, okay, past resistance, right? Let me do this. Let me take this off first. Past resistance becoming future support. Does everybody see that, right? We just dressed it up with the fib. If I take this fib off, that's the same thing that you saw, right? From your monthly and weekly time frame, you're just now zooming in on the daily, all right? Everybody drop me a 3 if they see that. Awesome, right? So even if we didn't have these fibs on, the fibs just help us to identify the key levels, and the key retracement levels can help us to project, right, over the long term, because we're on a daily time frame. If this is ultimately going to be the C, the low, and price gets bullish from here, risk on, commodity currencies typically do well in a risk on environment. The yen is a safe haven, right? If we're in a risk on environment, safe havens, the money typically flows out of the safe havens. If this is going to be the low price, right? And you got a demand here, right, at this price level, then right now, based on this 50 to 61.8 pullback, your expected long-term D extension would be a 1.618 right up against this outer trend line. Okay.
Hey, Benny.
Yes.
Hey, this is Danny. How you doing?
I'm good. Thank you. How are you?
Very good, but I'm having a little bit of problems with, I'm a month in now. So actually officially today, I'm 1 month in with y'all. And I got to say thank you. It's a blessing. I've learned so much.
Awesome.
Where I'm having problems, though, is I've been through the videos several times, and for some reason, I am having problems when I open up a chart and figuring out where exactly to start dropping my fibs. Because, I got Smart Trader because I was having problems with that. And I said, well, if I do the smart fibs, maybe that will do it. But even with the smart fibs, sometimes where I'm dropping them, it doesn't line up and look like your charts. So,
okay. Okay.
So I'm missing something. Something's not
Mhm.
clicking as to where I'm finding my points to drop the fibs.
Yep. So here's your lowest point, right? In that uptrend.
Mm-hmm.
Right? The way you explain it, fine. And we're on a daily, right? So just mind you, this is longer term, right?
Okay.
You find the lowest point in the trend,
Mm-hmm.
right? And you see this big, huge wick,
Mm-hmm.
right? Sometimes people just get off because they'll click it like that, right?
Mm-hmm.
What you have to do is you have to come beneath that lowest point like this. So
Mm-hmm.
make sure you highlight it, go well below it like that, and then click it.
Okay, so it matters if your mouse is underneath the
Oh, yeah.
actual low.
Absolutely.
That might be where I'm going. Okay.
Yep, absolutely. The low, or if it's in the other direction, the high.
Okay, I will try that. Thank you.
Yep, you're welcome. You're welcome. And if that's not it, let's keep working at it until we figure it out, right?
Absolutely.
So make sure you keep bringing it up every session until we figure out where you're off.
Hey, listen, I'm trying to be like y'all when I grow up.
I hear you, right? Everybody can. Everybody, right? You put your mind to it. My dad always told me, man, if you can read, you can learn, right? So we can we all can do this. We all can do this. And we're just using a little bit of technology to help us along the way, right? So this is where we are, right? So we're just dressing it up with the fib. But if you didn't even, so that helps us say, hey, this is a key area, right? But and you can measure where price may potentially go from there. But if you didn't have the fib, right? If you didn't have the fib, this is still a pullback that held and created a support. Past resistance becomes future support. Okay, so think about that. If we were just playing this and we were looking at this daily chart and you said, okay, I've got to move down. Boom. It held as support. As a matter of fact, it gave me a nice doji, that morning star type of setup where I've got decision to the downside bearish candle, a decision candle that held at support, and I've got a bullish candle going in the other way, right? That's a nice morning star type of scenario, okay? If you played this, right, just a support and resistance game like that. If you said, okay, I've got this here. Look at this. If you just zoom in on this leg here, this leg was moving to the downside. Everybody agree on that? Drop me a 3 in the chat if everybody can agree that off this reversal point, off this level of resistance, price pushed down. It broke this level, kind of tried to retest it, but it stayed impulsive to the downside and then it settled in. Can everybody see that? Awesome. So if you took this move and you saw this, right? And you saw that it was coming into support. If you said, all right, let me link this down to the lower time frame. Here was the high that held at resistance. And it started pushing down. If you came into this trade and you said, hey, this is headed down to support, you can simply draw a trend line like this, right? To your downside. Hang on, so I gotta use this one. All right, there's a second touch like this. Here's the second touch that you have to respect and straight through. Okay, I'll make this solid like that. And then it continued, right? So we always say the trend lines can help you with what? The direction, speed, and momentum. So you see the angles of the trend lines changing, right? That tells you about the momentum in the market. Who has control of the market? The bears, and they're strong to the downside. Because look, because of that, it created like this, an inner trend line, all right? Just like that. So you could play the trend line break. Support held, I got a nice candlestick formation, boom, all right? It reversed. Now this is on a daily time frame. This is on a daily time frame. Now, I can run that narrow from there. But what I'm going to do is I'm going to run these down to the 1 hour. Okay. Just look at the price action. Look at that. All right. So now I want to trace these down. Like so. This. And then I got this trend line here, which we're going to be on the lower time frames because you have smaller waves. We're going to be able to get another trend line on it. So like this. Okay. Something like that. Okay. I'm going to go down to my 1. Here. Here is my inner trend line on the 1 hour. Boom. Right? So if you use your top-down analysis, right? And you say, okay, we just brought this all the way from the daily. Did everybody see how I did that? Yes or no? Somebody let me know. Because we got to get this part down. All right? We got to get this part down. You just simply used, right? You just simply used structure, support and resistance from the higher time frames down, right? To see this reaction and this reversal, right? Because we trade reversals. That's what we do. Okay, we trade the reversals. And people say, oh, reversals don't work. Well, guess what? If somebody tells you to trade with the trend, okay, see, look. Let's think about this. All right. They say, well, you shouldn't trade reversals, right? Sometimes it's just wordplay and it doesn't always make sense. They say you should trade with the trend, right? Don't trade the reversals. All right, well, look. Everybody, this is a downtrend. Can we all agree on that? Yes or yes?
Yes.
Yes, this is a downtrend.
Yes.
And we like to sell on a downtrend if we're trading with, okay, if we're trading with this trend, okay, that's down. Do we like to sell high or do we like to sell low?
Hi.
We like
High.
we like to sell high. Okay. So if price moves down, do we want to sell it here, yes or no?
No.
Right.
No.
No. We want to sell it where? Here?
Yes.
Yes.
High price, right?
Yes.
And are we trading with the trend?
Reversal.
Yes.
Reversals.
Right. If we're selling right here, we're selling with the trend, right?
Yes.
But in order for this trend to continue, what does price have to do at this high
Reverse.
point? Reverse. So you're trading a reverse. So there you go, everybody. So at the end of the day, you're trading a reversal. Okay? So there we go. So the game is to trade reversals, whether you're buying or selling. At some point, in order for you to make money off of that, price is going reverse. All right. So just a quick lesson on that. So that's what we mean by reversal trading. So
Hence ABCD.
right. Absolutely. Absolutely. So there we go. So now we just looked at structure. Boom. Right. Now, when this closes out, now we're not going to mark this on the daily because we don't officially have a swing low yet. In order to have a swing low, we have to have 2 candles to the left and 2 candles to the right, right? That are higher than the center wick low. This is our low out of that 5 candle combination off this reversal. We won't put daily support here because this candle's not closed. It won't close until Friday close. But if you go down to the lower time frame on a 4 hour or a 1 hour, this is going to show up as a support. Okay. So if I go down to the 1, like this, here was my reversal off that support. This is why we do higher time frame top-down analysis in regards to support and resistance, right? So you can see these key levels. So if I don't have this key level marked up from my weekly time frame, and I'm short on my 1, and I'm like, I'm short, this is good, look at the momentum to the downside, and then I get caught on a reversal, then you start to wonder why. Well, if you had the higher time frame structure mapped out, you would have known that this is coming down to a key level. That's why we do it. All right. So we don't have any fibs on here whatsoever. And this was your play right there. Okay. So we have, all right, we keep an eye on our long-term, right, projections. Okay. So we're actually kind of teaching you multiple things in one. So from a daily time frame, our potential long-term, if this is going to get bullish from here, like this. If this is the reversal point, we're ready to go into that, what we call that C to D push zone, then our long-term projection is here. Okay, now I'll put that right up there, like that. Boom. That is over 1,100 pips away, long-term. So there's the long-term, and then there's, hey, those 24, 48 hours, 72 hours, sometimes a week type setups that we trade off of that, right? So if our bias is that, hey, now I'm thinking bullish, right? Now, right, I can start to look, now that I have these targets, I can start to look for bullish type setups, right? Fundamentally, we got some alignment. Technically, we got some alignment. So if I come down here to the 1, this was the move. Boom. See, look. Like this. Bang. Okay. Straight up. Right? Went straight up. That was the play. Then look. ABCDs going up. And now look. This is how we find the intraday plays off of this. This here was a classic what? Somebody tell me what type of move this was.
80-20.
80-20. Exactly. Right?
Exactly.
Exactly. So you just measured out, right? The fibs just measured out the reversal point. But look, it gave you confluence because it was up against, look, take the fibs off. This is a weekly what?
Resistance.
Resistance level, right? So even if you didn't have the fibs on it, you just mark support and resistance. There you go, right? So this just helped us find the price action, okay? So we know in the back of our mind, okay, long term, if this wants to stay bullish, it could be 1,100 pips away, right? Way up here. So we can look to potentially trade up to that level, all right? If it wants to go bullish now. So what happened here? Bang, here we go. Here's our new AB boundary, price reversed, okay? Price reversed. These are all the trend lines that we brought down, right? So we're monitoring the long-term price action, right, of this currency. But then look, intraday, look. Bang, look at that. You got a break to the downside. Can everybody see that? That's clean. You can't get any cleaner than that, right? And what this fib does and these levels, they give you these levels to where you might want to take some profit, right? And how you can manage your trade. Okay, like this. TP1, TP2, TP3. It took all of them out. It took all of them out, right? And this is how we just play the price action. Back in the mind, we know this could be potentially bullish long term, but for our intraday plays, we could just map out the fibs within the support and resistance levels. So now, right, our rule is what? As long as price doesn't take out the A, this is our A on this fib. Okay, so I'm gonna take this out because I want to keep the chart clean. All right, and just look. That's what I mean by sometimes you just have to turn on your charts and look at the price action, right? And I hope everybody's following me so far, right? So we were making up ABCDs, Boom. Now we're making down ABCs. Can everybody see that when this price reversed to the downside, you see the waves, so you know, right? Don't let it confuse you. Look, it's just now making down ABCDs. Okay? Just like that. So look, now all three of these, right? If you were a part of this ASEAN and you took this B to C move, it took it out, right? Long as price doesn't take out the A, it has no choice but to go away. Well, it took out our A. This is our AB boundary. Okay. So for some of our newbies, look, A, that was our A. Okay. And then this is our B right here. That was our B level. Smart Fibs did that for you. Didn't have to manually do it. That's our AB. Look, our A got taken out, right? A got taken out. So when we get an A taken out, we're saying, hey, that's a directional change. Price changed direction to the downside, right? It wasn't just a temporary pullback, right? We didn't get this, and then this is our C, somewhere within this AB boundary, okay? We didn't get that, followed by a reversal to our up push zone into the D extension, right? We didn't get that, right? It just continued down. It just continued down. That's fine. That's fine. When price takes out the A, then what you do while you're playing these intraday moves, just think about it. It looks kind of all over the place when you zoom in on it, but from a daily time frame, right? From a daily time frame, okay? You put your fib and you look at it, you still, if this wants to get bullish, overall, okay? Through all the mess, right? And that's why sometimes we tell you, you got to zoom out through all the mess on the lower time frames and all of the smaller waves, right? You're still doing this, right? So look. Okay. Right? We're still moving in that direction, right? So look, here's that down move, right? Okay. Can everybody see that swing? So through all of this mess, we're still on that trajectory, right? Until the market tells us otherwise, okay? So if we take these off, okay? And we say, all right, our A got taken out. Okay. So what do? We draw the fibs the other way. Bang. Okay, look, down ABCs, down ABCs, right? Here is your fib, right here. This is your fib where price action took out the A, right? Where price action took out our A. Can everybody see that? Drop me a 4 in the chat, right? Communicate with me tonight, right? We want to make sure that we want to get this, right? So we're still following that overall, that larger wave off the daily, right? But it just gets a little choppy with the smaller waves on a lower time frame, right? But ultimately, you're still heading in that direction, right? From the daily time frame. This is why we say that the higher time frames control the lower time frames. The parents control the kids, right? So now we got this taken out. And look, you got an AB boundary, right? We know that's a potential 80-20 play. We never got it, right? That just tells you that the momentum is strong to the downside. And we say, hey, well, typically, when you don't get like a deep pullback on the fib, the next fib, typically you can get a larger correction. And that's exactly what you got, right? This is exactly what you got. All right. So look, think about this now. This part happened, right? We played it. Okay. Let's clear this out. Let's clear this out right here. So this happened. Now we're focused on this leg here. Can everybody see this impulse leg here? Right? So this is how you can just trade the same thing over and over and over again. All right. So look, we're to the downside. We know that this A got taken out. We're to the downside. Okay. So look. There's my smart trend line to the downside. Right? Coming off that trend line that we drew from the higher time frame. Okay. So look, boom, ABCDs, right? Potential 80-20 play here, right? This is a crazy one, right? Kind of put you in that harmonic type of situation where you got just about a 382, it pushed down and then pushed back up. Didn't even get to our D extension on this fit. That happens in the market, right? The key is just recognize it. But at the end of the day, what did it do? It took out our A. Does everybody see that? Right? Yes, no? Yes. All right, awesome. So when it takes out our A, what do? Somebody tell me.
You drop the fibs the other way.
Draw new fib.
Excellent. Look, here's our low price. Make sure that was my low. Right. Yep. So that's our low price. We got a trend line break here, right? We're right back at it again. Right? We're right back at it again. We got a trend line break now. We got a new AB boundary. We got prices set up to this D extension. Now, this price right now, let me put my the stochastic back on this. All right, we're in the buy zone, right? So when the A's in session, this may hit the D. If it does, if it hits the D and it forms a new high, somebody tell me what's going to happen with the smart fib.
It's going to make another fib.
That's it. There you go. It's going to make another fib. We're going to have a new AB boundary and we play the game all over again, right? So, but right now, this is where we are. So we say, okay, well, right? All trend lines and angles. Look, just like that. Okay, come here. All right, not gonna give it to me, so I gotta do it manually. It gets tight like that. All right, it's here. One, Mr. Ray. One, just like this. And now it's kind of, I'll put this outside of this level here. And there we are. All right. So if it hits the D, we wait for a new AB boundary to be formed. That's fine. If we're saying, hey, I am a bull on this, right? I'm bullish on the Aussie yen. I don't want to buy it right here. What I want to do is, right, exactly. You got it. I don't want to buy it right here. I want to see this price come back down like this somewhere, right?
Right.
And then I want to look to go
On the
long.
way up. Mm-hmm.
Exactly, right? So that's how you map it out, right? This is how you map it out, right? The price action doesn't have to be scary. That's how we just mapped out exactly where we are currently. Here's the beautiful thing, right? With this method. Say that this price from the daily time frame, right? From the daily time frame, let's say that this price is just wacky as all get out, which it can be, and it wants to break its way up to the top of this outer trend line here, and then drop, right? And then drop, okay, for a deeper retracement. If you were trading a B to C move on this, you're already short anyway. Did everybody get that? I hope.
Yes, sir.
Right? You're short anyway on the you're short anyway on the B2C move. And if you're saying I'm a bull on this, then as it shorts, it's going to continue to short and it's going to take out your A anyway, right? Either on this fib or the next fib. And then you're going to be looking to trade the other direction anyway, right? So that's the beautiful thing about the method that we teach, right? That sometimes, right, I want you guys to just practice. Go back on your fibs to like the beginning of the year and just start dropping fibs. And when one fib gets taken out, put it in the other direction, right? And just start getting a feel for the price action and the wave sequences, right? That really helps you. It really helped me in the beginning, okay? So this is where we are right now, real time on this play. We got a stochastic in the buy zone, right? This has been real impulsive, right? When you went back risk on and the stock market started rallying and all of this stuff, your commodity currencies typically follow, right? Globally, there's optimism, right? Whether it's real or temporary or not, there's optimism, there's high speculation, right? And people putting that money on the line and risk your assets. People are happy. The economy, oh my goodness, the economy's going to expand. And so that demand for commodities tends to go up. All right. And then you see that money flow out of the safe haven, which is why you saw the JPY get weak, right? Because money started to flow out into riskier assets. So that's where we are on the Aussie yen. But it all starts from understanding where you are with your support and resistance, right? So to sum it all up, if you sometimes, we can get confused because you can start dropping fibs everywhere. Like, well, we got these down fibs here, right? Like that, boom, right? If you just wanted to concentrate on the most current impulse leg, right? You can make your money in this market, right? Using the method that we teach, right? And we teach it kind of as an overall framework because every trader's journey is different. That's why we do it this way. We don't say you must do it like this or you have to do it like this or these are the time frames that you have to trade on. No, we share with you what we do, and then you're gonna find where you're comfortable, right? It's all about your journey and what you have a tolerance for, right? And the type of mindset that you have as a trader, right? So our job is we're giving you the overall framework and show you how we navigate and move about the markets and looking at the price action, right? And combining them with the fundamentals. But if you spend the time, because you can't get around that, right? If you spend the time on the charts, you're gonna start to get a feel for what you like, right? You can find a play, right? If you started here, right? You're looking for the impulses. If you ran a play here from the top of this level, right? And you drop that down to the 1, look at where it puts you, right? If you drop that down to the 1, you'll see where that puts you. It puts you right here. And start running your fibs to the downside. And it would have put you in the same scenario. Does everybody kind of get what I'm saying? Right? So if the broader overall picture, right, is not your thing, right? If seeing this is not your thing, right? Because this is just helping you find some key U-turns, right? In the market. If this is not your thing, then okay. Find where the reversal happened. Find where, look, just run a trend line. Look at this. I got an up impulse move like this. Yeah. I knew nothing about, right, the other type of shit. Look. There's where it broke. All right. So if I come down here and I go to the 1, okay. I'm gonna clear this whole chart out. If I come down here and I go to the 1 and I circle this level. Let me get these out of here. These out. And I say this was my high point, and then I get a trend line break. So this is where I want to start on my 1 hour. Okay. And that's going to require you to scroll back through the charts and find that. Hold on. Like this, okay? All right. So I'm gonna scroll back through my charts and look, there it is, right? This was the high point before the trend line break. And if you just start here and start dropping your fibs, right? Okay, that got taken out, all right? I'm trying to get back to real time. That's a high, nope, that's not it. Look, boom, that got taken out, all right? Telling you, spend the time on the charts, right? It'll take you there. Oops, I'm not back far enough on that one. Boom, all right, there we go, look. Right? If you want to do it like that, that's your overall fib right there, right? That's your overall fib. You can live with that, right? Look here, there it is, okay? Look at everything that we found, right? Here's the same thing here. That's the same area for the reversal because we used it. We used the support and resistance from the higher time frames. That's your same level here, okay? All right, and then here's that same setup right there. Bang. Everybody see that? And the reason why you're still in this down fib sequence, right, is because prior to, right, us getting to this key level on a daily that we know about, price was pushing down. Does that make sense? Price is moving down. It's moving down. So you should be having down A, B, C, D, right? So look, okay. So this is the overall move. And then you start to master your support and resistance, and you can start to find the other plays within it and to know where this chart wants to go. So if this is going to keep going up, it's going to take this level out. If it's going to chase that daily D extension that we drew up off of that capital fib off the daily, it's going to continue to push up, right? And take this out and continue on, right? Does everybody see that? Right? Yeah. So you could navigate and just focus in on one leg and where that leg is, right? So we all, people that's been with us for a while, we all remember this move, right? 80-20 swing off that move, and then now you're back to the downside, okay? So you could just follow use your trend lines and follow your waves, right? So this is taking you right back to where we were anyway, right? But look at that, 80-20. That was a swing off the area all the way up, 385 pips, back down, 300 pips, and now we're moving back up. It's fun when you actually get used to it and know it, right? You can use that fib off the higher time frames, right? You're gonna discover what type of trader you are, right? Am I more long-term, Miss Casey Jackson, dropping 500 pip trades, right? From the daily time frame and the 4-hour on down, right? Or do I want to be able to see, okay, I got an overall picture of the market, right? And where we could potentially be headed. But I like more of those intraday, right? Where I'm holding a trade for 24 hours, 72 hours, maybe even a week. And then I want to reassess where I am there. So I want to trade the smaller ABC. So if I'm moving in this direction, I just want to trade the smaller ABCDs on the lower time frame as we head to that D extension, if that's where price wants to go, because it's gonna go, right? So if you're looking at a bigger wave, okay, if you're looking at the larger wave here, like so, okay, we're getting a larger wave like this, okay. This is our larger daily wave. Well, if this starts to go up now from this down retracement, if this starts to move up, it's going to move up on your lower time frame. Okay. in smaller waves, right? It's going to move in smaller ways. And if you like those type of scenarios, then that's what you're seeing right here, right? Where price is potentially looking to make, right, those smaller ABCD waves as it moves up, like so, okay? Now, some people, hey, at every D extension I want to get out, some people look forward to say, hey, every time price pulls back, I'm gonna add to the trade that I'm in because I've got a higher time frame perspective, and I think this price is going to continue to go long for 900 pips, 1,000 pips. So every time I get a new fib and a pullback, I can look to add to it, and I can look to trade that B2C move, right? Either way, make money on the way up and the way down, right? That all comes down to trade plan and trade management, right? So I really wanted to take the time to really kind of go over this. What is moving now on the 15-minute 80-20 play, making an 80-20 play on the 15-minute, right? So let me where's my 15-minute, right? It's dropping now, right? It just broke that's a 50 SMA that it just broke.
Hey, Benny.
Yes.
Hey, I have my fib on the hour and then I brought it down to the 15-minute.
Oh, you brought it down? Okay.
Yeah, because I was looking at how fast it went up today. Like the momentum was so strong to the upside that I was like, oh, it could come down to like retrace a little, but just watching it, not really like doing anything.
Yeah, you know it likes to take part of it back, right? So you're looking at it like this, right? So something like that. You just got to break it to 50. It may be start to make that way back down, right? So just close bearish on that 50. It's gonna be interesting, right? It was super impulsive today to the upside. It got aggressive to the upside in a hurry, right?
Yes.
So it just shows you like how you can flow, but it all starts with, right, that higher time frame, support and resistance, right? Support and resistance, right? Look, you gotta see where that trend line broke and it started going to the downside, okay? You gotta see that. Spend the time on the charts, right? And just navigate your way through. Start to spend the time on there even more when you get a chance, right? To get through it, right? So we see that, right? We know how we drew the aggressive trend lines. But look, that's all it is. It literally, like when we say it only moves up, down, and sideways, it really only moves up, down, and sideways. It's a fairly primitive concept. It's very primitive, right? When you think about it and how the markets move. Okay. What questions do we have? Ask questions, right? That's how we learn. Does anybody have any questions?
I have a question.
Sure.
So on this specific play, like on the hour fib, because sometimes I hold on to the bad trades and that's what messes me up. Like, for example, like right now, I'm like, okay, I took the ride up. So, and then I cashed out at the top when I saw it hit the resistance. And then I'm like, okay, so I can draw my fibs and then play it down the 80-20, try to get it to at least the B level, catch those pips, to try to just catch them until the ride back up. But I don't know, like that's where I'm at. Like, how do I know to leave it until like when to take it out? Like, I don't know.
You have to put some rules together.
Yeah.
Okay, and then stick to them. And it's hard. That's why we talk about it so much. It's hard. It's hard, right? Because you're like, I don't want to miss opportunities to make money. But there's never been a correlation between trading more and making more money.
Yeah. It's like I do the small lot now, but it was funny because I was like, oh, I caught 90 pips on 1 cent. Like, I'm not trying to catch 1 cent. Like, I'm trying to do, you feel me? Like the demo account is looking hefty, but like I was like, yo, nah. So I feel like I don't know. That's the part. I don't know. I'll get it eventually.
Here's what I'll tell you. Here's what I'll tell you. Is that, especially for people just starting out, everybody has a different trading account size, right? But this is which is why funding programs have become so popular, right? Because besides the risk management, things like that, and trading psychology, I'm gonna say it's the number one thing, because it's the number one thing what I'm about to tell you, because it's what messes up your psychology and your risk management. Is that the number one problem with a lot of traders? If you put the time in on the charts, it doesn't take you a long time to really get technicals, right? Like I said, it's fairly primitive, right? When you really start to spend the time and look at it, like, wow, it's just moving three ways. What messes people up, the number one issue, is that they are undercapitalized. They're undercapitalized. You have a small account, right? And you're like, I'm trying to make some money. But here's what I'll tell you, is that the reality that you may have limited, right, resources, right, depending on the size of your account, it doesn't change the fact that your trade size should be small. It doesn't, right? It's just a mathematical fact, right, that you want to stay around that 1% range. I don't care. People can disagree with me. I don't care what people got to say. I don't care, right? It doesn't change the fact that your trade size should be small, right? So the number one issue is that people are just undercapitalized, which is why the prop firms coming back, right, and looking for talented traders with the skill set to be able to make money from money, and they're willing to break bread with you 50-50, 70-30, 80-20, some 90-10, right? Is that, it gives you an opportunity to kind of get beyond that. That's why we always tell people, like, okay, let's focus on catching these tips, because the money will come, right? Because the bottom line is that the market, neither the market or the math really cares about how much money you can afford to trade. It just doesn't. It just doesn't. So that's why when we sat and thought about this thing, like, man, if we could just get people.
Sorry to interrupt you, bro. Can you make that statement one more time?
What? That the market, the markets, or the math for that matter, don't care about how much money you can afford to trade. It doesn't. It doesn't. That's why our approach is to methods down. Start to first of all, get to the point where you stop closing out your month and you're losing money, right? I didn't say you're not gonna lose a trade. Stop losing money, right? Quit ending up in net losing months. Then get to the point where whatever you're investing to become a better trader, whether it's your software, your $39.99 subscription, let's narrow this down, right, into bits and pieces of progress, right? So first, let's stop losing money. Ended up in net losses. Then two, let's make sure that we consistently make money, right, at the end of the week, end of the month, to where we can pay for our investment in either our education, our trade software, whether you go to seminars, whatever you do, let's make sure that we can get that covered first. And then let's become profitable, right, consistently profitable with our methods, with our trade plan. Because then once you do that, you can take those fundamentals and that consistency, and whatever prop firm you want to apply that to, your own account, when you want to see your own account grow from 1,000 and work it to 10,000, right? You're going to be able to take that, what you created and what you've gotten consistent at, and you can apply that to any arena, whether it's this prop firm, that prop firm, your own account, whatever, right? So that's why we say, like, yeah, that micro right now, that one micro at 50 pips is $5. Well, boy, when it gets to a standard, that's $500, right? That's $500, right? At $100 a pip, boy, that's $5,000, right? But you want to get to those levels and still be only risking 1%, right? Imagine that. I'm trading 1% and I'm making a killing, right? When you're able to say that to yourself. So I have minimal risk. And because I've become consistent in my methodology, right, and become more confident as a trader, right, now if I add some capital to this game, it's lights out. That's life changing, right? But just know that the market don't care about how much money you got to trade, what you can afford to trade. Don't care, doesn't care, right? And I'll say it one more time. The reality of limited resources doesn't change the fact that your trade size should be small. People on YouTube rent Airbnbs, driving Lamborghinis that they rented. Doesn't change the fact that your trade size should be small, right? But we know that 1% at 50,000 is a lot more than that 1% at the $1,000 that you might be trading right now. And that's okay. That's okay. You want to get confidence, go back and read the stories, right? Or listen to the interviews of traders that are well known now, iconic traders, and see how they started and see the amount of capital that they started with. Wasn't much. But they focused on getting consistent first, then they scaled up, right? Let's get consistent. Because some reason, like our mind psychologically just plays games on us, like, if I had more money, right? I would be good if I just had the no. If you're not consistent, if your risk management is horrible, the losses are just going to hurt even more if you have more money, right? So that's why we focus so hard on really getting these fundamentals down, right, and getting the technicals down and working on your mindset. That's why we have a whole day, right, a whole session dedicated to the mindset. Because if you never get to that point, right, you never get to scale to the levels that you want to if you can't get these things down, right? And I know a lot of times we come into this and we're introduced to it a whole lot different than what we're telling you, but these are the realities, right? These are the realities. So, just wanted to make sure that I added that. Hope I'm helping somebody. So, okay. So that's where we are, right? So always start with just that, marking out those support and resistance levels, right? And look at it before you even drop a fib anywhere. Just look at it. This was going up. This was going down. that is that. Look, this was going down, and it started making its way up, right? It's the same charts that everybody sees around the world on the Aussie. This is what they're looking at, right? If they're using candlestick charts. All right, spend the time with it. Make this your baby. That's what I had to do, right? Nurture it, learn it, okay? So that's the Aussie. So I know that was a long time covering that, but wanted to make sure that we work that out on the charts, okay? And you kind of take the same approach to everything. All right, so I'm gonna take a look at a few more pairs. Ryan, anything to add to that? I know I've been saying a lot tonight, but
0.
Awesome, cool. All right, thanks for the feedback. Yep, Juan Wilson, trust the process, right? Fall in love, become obsessed with the process, not the result. All right, cool. Oh, you're welcome, Danny. Appreciate the feedback. So let's take a look at the GJ. All your yen pairs really. Set this GJ up, take a look at it, see where we are on the charts. We'll just blaze into the 1 hour right now, right? That's another potential 80-20, everybody. What's weird is because, right, we know that all indicators are lagging, that because this impulse move today was so strong, especially with the hawkish statements coming out of the UK, right? Look how impulsive this was. But I mean, that GJ move, right? We said look out for it to the top. So if you guys took this, congratulations. We almost made it to 3 TPs on that, right? That was a huge move. So hopefully you were able to catch a little bit of that. So if we run these sub fibs to the upside now, we got a brand new 8 boundary. right? And we can potentially see the pullback. All right. Now we know we're in risk on. We know that we've got hawkish statements coming out of the UK that gave it a lot of power to the upside. But even with that being said, at some point, right, people take profit and the market likes to retrace, right? So we see we've got two fibs here, right? But based on what we're thinking fundamentally, this price can pull back. But as long as we stay in a risk on situation and that pound stays strong, we eventually probably would like to see that break this A and continue to push to the upside. But right now, right, if you just trade what you see, if I took this fib off right here and we didn't have that, if we took this fib off and we're here at this 786, this 86 range, right, we know that there's a possibility, right, after a huge impulsive move that the market's going to take some of that back. So my mind has to tell me, hey, there's a potential short here. Then if you want to dress that up with the confluence of the fib, right? If you want to dress that up with the confluence of the fib, you can say, look, I got a brand new AB boundary at a 786.86 level, right? We know when we get a new AB boundary, right, in any direction, just like here, there's a potential for what? A reversal, right? The only thing that's misaligned because of the impulse movement, because of the indicator hasn't caught up with, right, the strong impulse. It makes me wonder if this is going to push up a little bit more, right, which it'll take out that A at that point, which is totally fine, because that means we'll have a clean 80-20 at the 127 after a shallow retracement, and then we look for price to push back down, okay? So this is kind of weird, like a lot of your yen pairs are looking like this, where you got the misalignment with the stochastic, but you can take it to the 15 if you want. Now that you see where I'm at on this one, you can take it to your 15 and continue to just monitor it if you want to do it like that, pushing sideways. You could put a 20 or a 50, right? If I'm super conservative, right, I like that 50. It's sitting there, okay? So, or you could put a trend line, right? So this is more just like of an elastic, right? It's more elastic than a hard, rigid trend line, okay? You can use a moving average like a 50, or you could just draw your trend line, okay? Or you can say, you know what, I'm hands off of this trade because I don't have this in the buy zone yet. Because maybe it just pushes sideways through the Asian session, right? A lot of times you'll get that after a strong impulsive move. With price, there's equilibrium there, the market's resting and accumulating. And then maybe, right, by London session, moving into the morning, you might have your stochastic back in the buy zone, into the sell zone. And then we can look for that correction, all right? So just be patient, But we know, right, that last move, strong move that we had, right, that we were tracking was to the downside. And we said, hey, okay, trend line break, boom, down. Hey, look for the reversal. We got a new AB boundary. Price was stalling out. We said, look for that return, right? Look for that pullback, right? So we're going to see now that fundamentally some things have changed. Let's see if it pulls back eventually. Maybe it'll continue and continue up, right? Which will be cool, or maybe it'll go down. Either way, you're in position to make it a profitable play, okay? So, like I said, congratulations to people that took that GJ. Anybody take that GJ to the upside off of that setup that we drew up? Nobody? It's a nice move. Juan Wilson, yes. Okay. Awesome. All right. Well, if you didn't take it, just study the price action. That's cool. All right. Especially if you're in the beginning. All right. Just look at the price action. So it was even sharper than what we drew up. Okay. So that's where we are on that GJ. All right. And this is just playing, right? Playing that 1 hour chart. Just playing that 1 hour chart. Somebody had a question on the GU. So let's take a look at it real quick while we're looking at the pound dollar. Looking at the one, right? Finally, it took forever, but we finally got TP1 on that. Well, just about TP1, got close enough to call it a take profit. TP1 push up to the upside. This is huge, right? So we almost got to that D extension, and then look at the reversal for 130 pips. It's amazing. That's amazing. Now we got this push down, right? Again, it's stochastic is in a buy zone. Things just need to kind of settle in after that huge impulsive move, right? Just needs to settle down, right? And get back in position, okay? So if we look now, we got a high. We could potentially get a pullback and then a move back up, right? If we stay bullish, okay? If that pound's gonna stay bullish and we get a bit more of a correction on the dollar to the downside before it continues to head up, then you can see this move continue up and actually take out that A. But right now it's kind of just settled, right? We got to that CP1 and we're just settling right now, right? Just taking it easy and accumulating. So we'll see. We got a little sideways action going there. So no play right now, but a potential retracement B2C move back to the downside and then maybe back up on that. So that's where we are on the pound dollar, but the 80-20 play played out again. All right. So that's what? That's 130 pips on that one to the upside, depending on where you got in. And that GJ was pretty big too. That's a good week with just those two alone. All right. So that's the GU. Okay. Let's take a look at, we did the Aussie yen. Let's look at the EJ. We'll stick with some of these yen pairs and close those out. Let's take a look at the EJ. Okay. All right. That's our EJ. Look, push down. We got a huge reversal off that risk on scenario. All right. So look, that's what is this, everybody here? What is this? Somebody tell me what happened on this play, right? Somebody tell me that.
Is that a double bottom?
That's it. Let me clear that out. Let's just clear the chart. Look at that. All right.
It's a double bottom.
Absolutely, right? That's beautiful right there, right? We got some euro hawkishness there, right? So the way you want to look at this off of this double bottom is what? Right? Just look at the price action, right? We'll do that just like that. Okay. We got a break, okay, into the zone. All right. So we've been heading down, we're back up into the zone, we got a trend line break. Okay. So even if you want to come here and just clear this chart and you saw this, right? You could do this right here. If you wanted to do it like this, you could do it just like that. Come to this low off that double bottom, bam, you got a D extension that got hit. So based off of that, what's going to happen next, everybody? Are we going to get a new AB boundary? Yes or yes?
Yes.
Yes.
Yeah.
Okay. Right? So I cleared out all of that mess from tracking it to the downside. We got a trend line break. So here's the thing, right? We know we ran into the downside. Price was just dancing around within that down AB boundary, right? It reversed. But we see that we got a double bottom. Now, if we get a new AB boundary, right? Say this closes out at 11 o'clock, and this is going to be our second candle to the right. This, right, in this area is going to have to act as the C, most likely, right? So you get a new fib, right? And now you're back in that B to C scenario, okay? If you're a bull and say, hey, I got that trend line break out the double bottom, risk on, Euro's been pretty strong, then hey, I'll wait for a deep pullback, see what happens when I get to my levels, and then I'll look to go long on that, all right? If you want to sit and wait. But you're gonna get, right, if this remains the low candle, second low candle, you're gonna get a new AB boundary that forms, and then you can look, right, trade it how you want to trade it after that, right? B to C, C to D potentially, right? But right now, everything is looking pretty bullish in regards to the yen crosses, all right? In regards to the yen crosses because of what's going on fundamentally. So that was a quick move, right? That's a quick, hardly any retracement. Look, that's the first candle to the right, second candle to the right, then it just shot up off of that one, right? That's one of those funny type of fibs, but it's completed anyway. And you got a trend line, right? So if you're a conservative trader and you were just trading this leg, okay? If you didn't come off the double bottom, right? If you didn't come out of the zone off the double bottom, you got a trend line break now, right? So we're thinking, right, bullish. I need a low price. I need a low price though, Okay. Matter of fact, that we took out that resistance level. No, we came right up to it. All right. So we're thinking low price eventually, and then a continuation up. All right. So that's where we are on that Euro JPY. But that's a nice price action there. All right. That zone held. Okay. So that's it there. Let's take a look at the UJ. Okay. Look at that, right? How we were talking about that last night, that range, right? Right back up to the top. Look, 1, 2, 3. Guys, you start to see the patterns, right? In the crosses. Look. Right up to the top, all right? Based on this wave, right, in this range, you got a de-extension that got hit. So eventually what we're gonna get? We're gonna get a new AB boundary. And at that point, right, we're gonna find out, is it time for this range to be broken? Or are we just playing from bottom to top, top to bottom, right? So are we playing this game here, right? Like this. Are we playing this game? Okay. We'll see. We'll see. Stochastic coming down out of the sell zone. We'll see. Let's see what happens. But look, push down. All right. Okay. All right. The original. All right. Pushed up. We're back at that level. We know that we know that from a higher time frame, right? What we've been up against with the UJ for quite some time. Okay. So let's just see what type of reaction we get when we get the new fib and when we get to the top of this range. Right? New fib up against the top of the range. I'm thinking at least a pullback, right? At least a pullback. And then if it takes out the air of that new fib, then hey, we might be looking at like we're going back to the bottom of the range, right? So just how you have to think your way through the process, okay? At least using this method. All right, so we take those out. That's what that looks like right now. So we'll wait for things to settle down and we'll see. Any questions on that, UJ? No. All right, let's look at that CAD yen. All right. What's this one I got out of when I didn't get out of manually. I had a trail and stop on this one. All right, so there. It was that push down, right, that we posted in the Facebook group. And then, so I had a moving, a trail and stop on that, right? Because it started to get a little staticky, right? But look, you can't make this stuff up, everybody. Look at this. Is that similar price action or what? Somebody tell me, yes or no?
Repeat.
Yep. So all your yen crosses is about double bottom. The market's not random. It's not random. So this is your CAD yen. You got a new AB boundary. You guys see that right there, right? There's your potential 80-20. But again, because of how impulsive everything was, you got a stochastic that's in the buy zone. So we'll see. It's going to be a good little case study if we follow it to see how that plays out. After a strong impulsive move, right? How long does it take for that to catch up? What happened with the price action while it was catching up, right? So that's pretty much on all of the yen pairs. This market is amazing to me. Amazing to me. All right. I think it's pretty cool. I don't know about anybody else. But there we go, right? And then we see that double bottom and that W formation, right? Depending on the pair, right? It may move at a slower pace, right? Some pairs are moving slower, right? Through the move, and some are moving faster, okay? That's the CAD yen, all right? Somebody asked about the CAD Swissy. We'll take a look at that. See what that looks like. And CAD Swiss, right? This is just bouncing around, right? So here's this move here. We got an impulse move to the upside. I don't really have a play on it right now. Right, we broke it, then we pushed right back up on that. And we were looking at the potential right here. Okay. It's got to be at least at 86 for that level. Let me see something. Yeah. Yeah. So, let me. Yeah. Okay. Again, we got to let it catch up, but you may have a potential of a correction there. It's in consolidation, so you can play the levels on that, right? If that decides to make a reversal to the downside, 382, 61.8, right? And then on down to the 8 boundary. But it's been consolidating so much, right? After it made this strong push up, right? Strong push up on that 80-20 reversal, it just started to kind of push sideways, right? And so that's where you get that harmonic pattern playing in, but you may have a play here, right? Or you just stay off of it, especially if you made money off this 80-20 play, right? 382, 61.8, right? Tried to push up to that TP3, but didn't quite get there, start moving sideways. So that's all I got on that one, right? That might just be a hands off right now, right? Unless you want to focus on the try to zero in on the opportunity there on the CAD Swissy, right? And I'm just looking at 1 hours right now just to make sure we get through the pairs that people asked about, because we spent a lot of time on that Aussie yen. I want to take a look at this the Swiss yen, because that one played out nicely, right? Look at that. See here, right? This is a prime example, okay? Our A got taken out. Here was our 80-20 setup. We all take profits. So off the B boundary, that plays up 156 pips. If you had a limit order at the 127, do all three take profits at least, that's 137. B boundary to TP3 was 100, almost 110 pips on that, right? And now look, everybody, right? So check that out, okay? We want to keep an eye on this one, all right? This is our new fib. We just move our TPs like this, take that out, like that, and you got potential. Stochastic, right? Misaligned right now, moving sideways, but we're at that 127. So it's either going to push down or it's going to hit that D extension. If it hits the D extension, we get a new AB fib. The game is so much fun. There's only a few different things that it can do, right? Based on the Fibonacci structure. So that's why we like trading with it so much. So you got consolidation at the 118, 127 zone now, daily level here. So let's see how that plays out on the Swiss yen, all right? And let's take a look at the Euro Swissy. All right, so we got some good potential plays coming up. So the Euro Swissy, right, hit TP2. Pretty awesome, right? Reversed, as choppy as it is, it reversed and then made it to TP2. So this is the Euro Swiss. The Euro's been pretty strong. We have to see, right? It may get us a pullback on this and then continue to the upside, right? Some of us may be out on this now. I know I'm out on it. I'm in Euro Swiss right now, right? It's super choppy, but I don't have a play on it right now, right? May pull back and then continue up, right? When you're looking at the Swissy as a safe haven versus the Euro, that's doing pretty well. So we'll see. But that was a good little play, right? I mean, especially for, you look at the ATR on that, it's only 47 pips average. That's an average, 47 pips. That's why it moves so choppy. There's not a lot of volume on that. So that's it on the Euro Swissy. Anything else that anybody wants me to take a look at before we jump off? Ryan, anything to add as well, man, to close out this week?
Yo, keep showing up, everybody. Like the growth that we're seeing in you guys is absolutely phenomenal. I know I keep saying it, but every day you guys continue to grow even more, right? And that's why I press so hard on the 1% every day, right? Focusing on the process. One Dosen said, right? Trust the process. If you focus on the process in itself, the results will be what they're going to be, right? And you're able to see day in and day out that there's a little bit of validity to the methodology that we're teaching. So if you just focus on the process of each step, right? Like Kobe Bryant in the gym during the Olympics, from 1 a.m. to 8 a.m, getting the shots up, right? And just focus on the process, the results will come. I'm telling you, the results will come. But we got to continue to focus on the process. So keep showing up for yourself, man. Keep showing up for yourself. Super proud of everybody. Super proud.
Absolutely. Absolutely. Thanks, Ryan. Appreciate that, man. Yep. Absolutely. Powerful. Powerful stuff. Indeed. So we got a request on the Aussie cat. Cool. That's where we are right now, right? We're testing the backside of that trend line at a 61.8, right? We wrote that up a long time ago, right? Potential retest of the backside of the trend line. And we got it, right? So if you were short on this, right? Congratulations, awesome. That's 2 TP levels on the B2C move. Now, right, we're looking for that reaction, right? And Ryan posted this, I believe, right, Ryan? In the Telegram.
Yes, sir.
Yep. So, right. So another trend line example here, okay? If you look here at this point, one point, this was our lowest point, right? That was our lowest point. Then it pushed up and then it made a lower low. So you have to adjust your trend line like that. Just like that. To reflect that lower low. Okay. Now if you want to be super aggressive, right, especially like on the 15, you could do another one there. Right. You can leave that where that is and say, hey, can I get a trend line break, right? Off this level. Right? Trend line break. But look at that. That's prime time when he called it out, right? In the group. Backside of the trend line at the 61.8, right? You got good confluence there. You got a support that formed, right? We got a swing low that formed on that level. We got to push up. Now we're just moving sideways, right? So we get top and a breakout, right? So that's where we are. But off that level, what is that now? Almost 50 pips. Didn't look like it. Don't look like it, but moved up a good 50 pips. So we'll see, right? We're in the Asian session. We get that sideways chop a lot of times, right? Less volume. So we'll see how that goes. But that's where we are in our Aussie cat right now. We're thinking, definitely thinking we can come long, right? We can get long off that. But we'll see. We will see. You got 2 commodity currencies there, right? You can get chopped for a while, but right, what our technicals are saying is that we can get long at this point. So just continue to monitor it. It's a good setup based on the location and where price action, what it came down to test the backside of that trend line. All right. Okay.
Hey, Benny, real quick, I got a question.
Yeah.
Is that the daily 618 that it hit?
Yep. I pulled it off the what just happened? What did I just do? I don't know what I just did, guys. I moved it. Okay. Yeah, I think let me go back and see how I worked it out right here. See that? See how I got that trend line break and we never got that 382? Right? See how we never got that 382 off this down fib? See that? And we didn't quite get to that D extension. And our stochastic is in the buy zone. And we got this trend line break. And we took out this high. Right? We took out this high resistance there. See that? And so the play is like, hey, we got a brand new AB boundary. We shorted that, and we're saying, hey, maybe we short, and then we can look to get long. So I'm looking at this now. I didn't adjust it on the 1 hour. It's sideways. We may get a deeper push. I don't know, but it's looking like it's ready to potentially make a move based on how this we're oversold. But we're thinking up to that 382 eventually. Yep. So that's how I pulled that down. I just traced over this and brought it down to the 1.
Okay, I see what I did.
Let me see. Let me zoom out. Yeah, so you can see it clearly. off that last impulse move there, right? Just zooming in on that leg right there, right? Especially, if with those intraday plays and things like that, those smaller setups, trades, right? Even though with some of those fib targets, they can go over 100 pips or so, but sometimes it's just come look at the daily, right? Market support resistance up from your higher time frames, but come look at the daily and look, okay, here's my impulse move right here, and then look at the price action from there to get you to real time, right? And so that was a nice move to the upside there. You gotta respect that. That move pushed up, broke the trend line on the daily. So that's 250 pips or so. And then we had a retracement there. Right. So that was an easy play once that high formed to bring that down to the 1 hour. Right. And look to play that. Right. Look to play that B to C move there. Now it's just a matter of, hey, do we want to get long off the backside of this trend line? And what's going on fundamentally, right? It's going the oil prices, two commodity currencies. Like I said, you might get some chop for a little bit before it makes a move. But at some point it'll break out. It'll break out. Yeah. We good? Good on that?
Yes, thank you.
Oh, you're welcome. You're welcome. All right, let me check one more time. Yeah, cash switching. Go back to that cash switch. All right. Let's see. What time frame?
I just wanted to see, oh, perfect, right there. I just wanted to see how you drew that pattern.
That pattern? Yeah.
Yeah. And then you
Yeah.
put the move on it. Okay, cool. I just wanted to see that again. Thank you.
Oh, you're welcome. You're welcome. All right. Anybody else before we wrap it up? All right. Hey, it's been another phenomenal week, right? Hey, like we always say, we learn as much from you guys as you guys learn from us, right? It's always a new way to make things more clear, right? And to help you guys out the best way that we can. So thank you. We love when you ask questions. It helps us to become better teachers and also better traders as well. So with that being said, all right, we're gonna wrap this up. And it's Thursday, right? Yeah, it's Thursday. So we'll see everybody Saturday morning for the Forex Weekly Ritual. See what happens with the price action tomorrow and look for the setups for the upcoming week. So keep an eye on those yen crosses there, everybody. Have a good night. Thanks for your time.
Thank you, Benny.
You're welcome.
Good night. Thank you.
Thank you
night.
so much. Thank you. Thank you.
You're welcome. Thanks for the feedback, everybody. We appreciate it.